Hello friends, welcome back to my channel. This is a quick video about a lot of people are asking me questions about how to choose a strike and the expiry while trading options. So this quick video is just a kind of a opinion and a suggestion from my side. Okay, so the first thing that comes in a mind is how to choose an option expiry and how to choose an appropriate strike. Okay, so before going into that, you should understand that there are two types of traders. So which kind of a trader you are, what is your actual intention? Two types of option traders. So what is your actual intention? If that is the first question you should have in mind. Once you know that, maybe you can choose plan 1 or plan 2. Okay, so let's go ahead and start with this video. um, the first kind of question is, are you trying to gain with momentum? Okay, so for example, if you see on my screen, this is just an AMD chart. For example, this is a big red candle. Now it has given me a bearish signal. So once the low of this candle is broken, say suppose over here, okay, once the low of this candle is broken, I go into puts. Okay, so now with that said, I'm just trying to gain a momentum trade. I am not worried about this is a 15-minute chart, so I'm not worried about what is the long-term trade or what is going to happen to AMD after 1 or 2 days. Okay, I just want to take say suppose if this, let's talk about this candle moved from 177 to 175.75. that was 1.25 dollars move. With that, you will gain a good amount in an option if you choose the proper strike and expiry. Okay, so I have just given it a back trace. So let's start with for example, this is 16th. I have just hidden the chart for 16th. Let's play it. Okay, I'll show you a strategy also which lot of traders are using nowadays. Okay, this is a 15-minute chart. Okay, and if you see here, the first 15-minute chart is it has made a green candle on 16th of February. So what traders are doing is, a lot of traders are, they are using this chart tool as rectangle, and they are making a, they are marking little bit more than the high and low of that particular candle. So this is the high. I have marked like couple of cents up and a couple of cents below the low. Okay, so they get into, as soon as these levels, as soon as this box is broken, they get on a trade on a 5-minute chart. Let's change it to 5-minute chart. So if you see here, the chart, the price of AMD, it broke 176.30 at maybe the time would have been 9:50 a.m. on 16th of February 2024. So at this price, people will enter the put because it broke the low of 15-minute candle of AMD. Okay, so here if I have to go now, what is this? This is just a momentum trade. I'm not worried about in short term, in couple of days or in today, by end of the day, what will AMD do? I'm not worried about it. I'm just trying to gain a momentum in next 20-30 minutes. Okay, so in this kind of a trade, you should always take, I have made some notes, I'm not sure if it is visible. So you should always take the nearest expiry, but for sure it should not be 0 DT, means 0 day to expire, means today's expiry. So it should not be a today expiry. It should be either tomorrow, means the next day, or more days. So for example, if I have to trade on 16th of February, I cannot choose 16th February expiry. I should be choosing the next one, which would have been 23rd of February. This is mainly for the beginners. Yeah, if you are a pro and if you are using 0 DT, you are making success on it, it's very good. You can continue doing that. Now, selecting the strike price, you should always select in the money. Okay, when I say in the money, so for example, in the current one, it broke 176.3. So in the money put would be anything which is more than 176. So like for example 177.5 put is in the money, 180 put is in the money. Okay, 175 put is out of money. So definitely you should choose in the money For example, here I have given an example. 175 is the spot price. If 175 is the spot price of AMT, you should take 170 call if you're going call side, or I'm only talking about buy side. Okay, I'm not talking about option sell to open. I'm always talking about buy to open. So you should buy to open 170 call or 180 put. Both are in the money. Now, what is the difference between out of money and in the money? There should be a lot of videos. Even I have videos on my channel. You can go ahead and refer to those. Okay. Now, since this is a momentum trade, you have to take your gains very quickly, and you should always definitely follow a stop loss. Okay, so here the way I do is I follow the stop loss of the same 15-minute candle, which will be still the box. So if I have gone here at 176, I will wait for the box to break at 180. But that is my style. You don't need to do don't need to do that much of a stop loss. You can take a small stop loss, maybe somewhere here, the same 5-minute candle which you got in. Okay, a little bit more than that. So this 5-minute candle was at 177.45. You can take a little more, maybe this point 178 would be a good price where you should do a stop loss. Okay, or else with respect to option percentage, if you want to talk about, you can do a 7% of a stop loss and 15% of a gain, which would give you 1:2 ratio, means 2 for gain, 1 for stop loss, and then you can quickly book your gains. You have to be quick to book your gains. And there is one more clause here. Whenever if the option moves 10% green in your direction, you see 10% profit, definitely put a stop loss above your entry price, whatever be the put. Okay, so now let's check the AMD puts. I have just opened market watch. This is market watch, and this is 23rd of February. If I have to take 177.50 put, okay, so on the right side is the put side. So these are my puts, left is calls, these are my puts. Okay, so if I have to go for 177.5, yeah, it is expensive here. It is showing that it's 7.2, because later in the day the AMD price closed at 174, around less than 174. So it is now deep in the money. So at that time when it was 176.5 or 176.4, this option price would have been near maybe something near 5. Okay, so you have to put $500 for this option. Now talking about stop loss, 7% stop loss would be simply 35 cents on that option. That is 4.65 is your stop loss. Keep it 4.60. Okay, 4.60 is your stop loss, and your profit target would be double of your stop loss, which would be around 5.7, 5.75. Okay. Now if AMD moves, let's see what happens in this 5-minute candles. Okay, if you see, it made a quite a good move. It went till 173.43, means you would have entered at 5 and you got a good one at good exit. In the same candle you would have got a good exit for your okay, for your trade. So that is about the first one. Now talking about the second way, if you are in a second type of a trader, if your view, you can be any type of trader, it's not about that. If your view is that this stock is going to give me a big move, okay, it might take 1 or 2 days, but definitely now there is a big move building in it, or you know some news about it, there is something cooking and there can be a big move can come. In that case, you can choose an out of money stock, out of money strike, and you should definitely have at least 4 days or more to expiry. The expiry of that option should be 4 days or more. Okay, that should be the expiry, and you can select OTM, means out of money strike price, but even that strike price, you should not be like when we were talking about AMD. If you have to go with the call side, and if AMD is 175, you can't choose 200 calls. Okay, that's nothing you will get over there. You have to choose a call which you think that might come in the money if you hold your trade 1 day or 2 day. Okay, I'll show you it with an example. This is a Tesla 1 hour chart. If I have drawn my, I'd like to draw boxes. If you see here, this was my box. Beyond above this box, Tesla is likely to give a big move. Okay, from above 189 it would be likely to give a move up to target 1 would have been 193, and target 2 it can go higher. Okay, how much it will go, will not know. We'll see that it can go up to 193 plus, it can go higher. But once it crosses above 189, I know that it's going to go till 194, 193 or 194. In that case, I will choose a strike like how much, 188, and it's around $4.50 out of money. Okay, so 192.5 strike I may be able to choose. Or if I know that in the chart, if I know that it's going to cross 195, I'll choose a 195 strike. Okay, just reaching that strike is also fine. Okay, in that case, if you see here, 195 would be like $7 out of money. Okay, so for example, Tesla closed at 200. As you know, the left side is calls and right side is put. Okay, so if I have to choose, this is 23rd of February. Okay, so if I have to choose something like $5 for the first target, it would be 2.7. If I know that it's going to go further, like 7.5, so 207.5, that strike is not there as of now. It may come on Tuesday when the market opens, new strikes like 207.5, and those will get added. Okay, there will be option writers that will write those, all those calls and those puts also. So 207.5 would have been an ideal call to take for Tesla on for 23rd of February. So these are like 23rd February expiry. Okay, and it would cost you around 1.47. Here you don't have to worry about every 10% 20% move. You have to wait, because you are planning for a big move. That case you need to wait. You have to take maybe 50% stop loss. Some people even give 100%, they make it like zero and hero. Okay, you can even do that if your option price is like 70 cents, 80 cents, less than 100. If you can bear that much risk, so you can definitely make it a hero zero also. Otherwise, 50% stop loss. So 1.5, 50% would be 75 cents. Okay, and your profit target should be definitely 100% minimum. That is target 1. So 150, your target 1 to sell is 3.00, means $300. Or else, once it reaches $300, keep a trailing stop loss maybe at 200, and then you can maybe let it rise, and your target 2 might come. If it goes further like Tesla did over here, it reached that $5, and then it went even further. Next $5 it reached 200 plus. In that case, your strike will come deeper in the money, and you can choose to take 200% profit also. Okay, it would be around, you got in at 1.5, 4.5 would be your 200% profit, and 6.00 would be your 300 profit. If you keep trailing your stop loss, like once it reaches 300, keep a stop loss at 200. Once it reaches 400, keep a stop loss at 300. Once it reaches 500, keep a stop loss at 400. So you can keep trailing your stop loss until your stop loss is gone. Okay, so until your stop loss is gone, just you can keep trailing and make big profit. So that is one way to do, but that happens only if you get this kind of a move. As you can see, Tesla went up straight. It did not give a dip in much of a dip in 1 hour chart. It went up straight from the low like 182, and it went directly to 200 plus. Okay, but if there is a dip, your one of your trailing stop loss will get hit, and you will get exit, but still you make a good profit. For example, if it is 300, you made and it goes to 400, if you keep your stop loss 300, it will get hit. If it went to above 500, stop loss at 400, still you made a good profit. Okay, so that is a way to choose your strike and expiry. Once again, if you are a momentum buyer, you are planning for like 15 to 20 minutes, maximum 4 candles. So 5-minute candle, if I'm choosing, I should be able to book my profit in 20 minutes. If you're that kind of a trader, try to choose a expiry which is closest, but should not be same day expiry. You can choose tomorrow or the next day or more days to expire, and definitely choose a strike price which is in the money, at least $2 in the money. Okay, at least minimum. And um, then you can try for a stop loss of 7% and gain of a 15%. It's okay if it goes with a stop loss 7 to 8%. Just cut your losses. Don't keep your losses. Don't sit and watch your losses forever. Okay, it's not. Have your stop loss somewhere. Okay, if you want to use 1:1, it's even fine. You can use 1:1 also. 15% gain, 15% stop loss, that also fine. If you got into an AMD put at 5.00, 15% gain would be 5.75, 15% loss would be 4.25. Keep a stop loss 4.25 and must exit there. Okay, don't keep watching. Move on, go to the next trade. There it will give you more profit than that, and you will always have your capital protected to do the next trade. So that is a main intention of a momentum buyer. Now if you have a planned risk, you are not watching and babysitting your trades. It's okay, you know that now this script, since it has broken some important levels upside or downside, it's going to make a big move. That time you choose expiry which is at least 4 days or more, and you can choose a strike price which is out of money, but not way out of money. It should be out of money in such a way that someday, like in 1 or 2 days, in 1 day or maximum 2 days, that strike should become in the money. Like for example, in case of Tesla, I showed you when it went above 189, 195 was likely to come. Okay, so you choose 195 strike. This is just an example. Don't judge my chart and all those things. I'm just telling you an example. Okay, I am thinking that 195 is achievable on Tesla. Okay, 195 is achievable on Tesla, so I will take that 195 call side. When I go above here, it might be costing me some $200. Okay, I will not book my stop loss at 150, 130. No, I will wait for at least 50%. Okay, at least 50% or little bit more also. Then only I will cut my losses. Okay, that's fine. Again, I will move on in the same strategy. If I move on to the other trade, that might give me a bigger move, and that might be going into success in my side, and it will give you. So remember one thing, trading is a long term thing. It's also a long term thing. You don't judge your profit losses on everyday basis. Okay, you have to see what happened in the whole week, what happened in the whole month, like that. Okay, in the whole month, if you see, I did lot of trades which some of them even went badly to downside. Okay, I cut my losses, and then overall I made, at the end of month, I was able to make 50% of my overall account size, which is good. Okay, so that way you have to judge your trading at the end of the month. Okay, not every day gain, fine. Loss, fine. I'll try better, I'll do better things next day. Okay, so go ahead, do with that strategy. So this was a quick video about how to select your option expiry and strike. Good luck to everyone and happy trading. Wish you a lot of profits in your upcoming trades. Thank you for watching.